going to start our case study presentation, which is portfolio management analysis. For the introduction, in this case study, we are required to choose 5 companies that are being listed in Bursa or KLSE. Before we go for the main point, the purpose of portfolio management analysis research is to determine and study how to balance the application of changes, creativities, and the maintenance of business daily activity, simultaneously optimizing the return on investment. This study will also help to sharpen our knowledge, works, and creativity. Okay, so moving on to our first company, which is Bursa Malaysia Berhad. Bursa Malaysia Berhad is the stock exchange located in Malaysia, and it is also known as Kuala Lumpur Stock Exchange back in the old day. Bursa Malaysia is also a place where they manage to complete range of investment services such as clearing, covering trading, settlement, depository, and others that are related to stock exchange. Bursa Malaysia also provide 3 different markets for the companies to raise their capital, which is main market, ace market, and lead market. Basically, Bursa Malaysia Berhad is a platform for company to increase their capital for investors seeking for profit and a platform for every investment activity. On to rate of return and average return for Bursa Malaysia Berhad. As we can see from the table, the highest rate of return for Bursa Malaysia Berhad is in period 4, which is 24.8175%, and the lowest was in period 6, which is negative 7.9946, and the average return for Bursa Malaysia Berhad is 7.9549. The variance for Bursa Malaysia Berhad is 142.9702. The standard deviation is 11.9570, and the coefficient variance is 1.5031. Moving on to our second companies, which is Panasonic Manufacturing Malaysia Berhad. Panasonic Malaysia Berhad is a company that provide and sell reasonably priced product and service in sufficient quantities in Malaysia. Panasonic is the first brand in Malaysia that manufacture household electrical appliances in Malaysia. But not just manufacturing and selling, Panasonic also operate, deliver, and maintain a series of product range with globally models below the name of Panasonic brand to the market. Moving on to rate of return, average return for Panasonic Manufacturing Malaysia Berhad. As we can see from the table, the highest was in period 3, which is 48.4375%, and the lowest was in period 5, which is 5.2094%. The average return for Panasonic is 18.7399. Moving on to the variance is 236.7797, and the standard deviation is 15.3876, and the coefficient variance is 0.8211.
I want to talk about the Johor Tin Company background. Johor Tin Company background was a manufacturing company, especially for tin cans, and located in Skudai, Johor. Johor Tin Company also diversified into the food and beverages industry. Therefore, we can conclude that Johor Tin Company has 3 segments, which is investment, food and beverages, and also manufacturing. Next, we move to the calculation of rate of return for Johor Tin Company. From the table, we can see the highest was 69.0476% in period 4, and the lowest is negative 25.1799 in period 5, and for the average return is 31.2085. For the variance is 1002.6562, and for the standard deviation is 31.6647, and for the coefficient variance is 1.0146. Malaysian Pacific Industries is an investment holding company and also manufacture and assemble, especially in semiconductor. Calculation of rate of return for Malaysian Pacific Industries, the highest was 65.2742% in period 4, and the lowest is negative 15.3597% in period 5, and for the average return is 21.4994. For the variance is 872.4235, and for the standard deviation is 29.5368, and lastly for the coefficient variance is 1.3738. Magnetec Industries is a management service company which is manufacture and sell especially in packaging materials. In 2006, Magnetec has diversified into apparel businesses. The calculation for rate of return for Magnetec Industries. From the table, we can see the highest is 52.1635% in period 5, and the lowest is negative 67.5283% in period 4. As for the average return is 22.8617, and for the variance is 2363.4692, and for the standard deviation is 48.6155, and lastly for the coefficient variance is 2.1265. Bursa Malaysia is a market value-weighted index that consists of 30 largest companies inside the market. Bursa Malaysia also provide a complete set of data, especially for investors. Bursa Malaysia also offer competitive service and also infrastructure in the market. For the calculation of rate of return for FTSE Bursa Malaysia, from the table we can see the highest in period 4, which is 5.1953%, and the lowest is in period 6, which is negative 8.4242%. For the average return is negative 2.3039. For the variance is 13.2179, and for the standard deviation is 3.6365. And lastly, coefficient variance, which is negative 1.5780.
Next, I will explain the portfolio analysis for 3 best stocks that have been chosen, which are Johor Tin Berhad, Panasonic Manufacturing Malaysia Berhad, and also Malaysian Pacific Industries Berhad. Firstly, for covariance Johor Tin and Panasonic, the amount calculated is 146.0538. For covariance Johor Tin and Malaysia Pacific, the amount is 634.4710. For covariance Panasonic and Malaysian Pacific, the amount is 55.1521. Secondly, for correlation Johor Tin and Panasonic, the amount calculated is 0.2998. For correlation Johor Tin and Malaysian Pacific, the amount is 0.6784, while for covariance Panasonic and Malaysian Pacific, the amount is 0.1213. Lastly, the question that has been given was if you have RM2 million of fund, 40% you will invest in stock A, 35% in stock B, and 25% in stock C. Compute the portfolio risk and return for selected stocks. As for the portfolio return, the amount calculated is 24.4172%. As for the portfolio risk, the variance is 421.3971 and the standard deviation is 20.5280.
Based on the table, it shows the comparison between portfolio and KLCI. It shows that portfolio have the higher risk, which is 20.5280, while KLCI have a lower risk, which is 3.6356. This is because KLCI having the most convenient benchmark and fully invested portfolio. In conclusion, KLCI is better than portfolio risk because KLCI have a lower risk. Based on the table, it can determine whether it is underperform or outperform. Portfolio risk and return is outperform because it is higher than KLCI. In fact, the stock for portfolio are expected to have a higher return. Next, KLCI risk and return is underperform because it is lower than portfolio. Clearly, KLCI stock are expected to have a lower return.
As to conclude the study, we could say that portfolio management function involve investment process, comprise selection, interpretation, and evaluation of investment project while considering risk and returns. For the recommendation, we do always recommend future investor to always do portfolio analysis before partaking any investment in order to decrease risk of losses and increase the chances of gaining profit while can also maximizing the profit and minimizing the loss.